prospects and also the implications for our economy. I will, as I normally do, give you a quick overview of those elements that have been covered in the MPC of today and which have been extensively deliberated upon also. I will start with international economic developments. Global growth continues to be resilient. In its July 2024 World Economic Outlook, the WEO update, the International Monetary Fund has projected global growth to remain stable at 3.2% in 2024 and 3.3% in 2025. Growth performances across key advanced economies were encouraging also in Q2 of this year. The US economy grew faster than expected on the back of solid gains in consumer spending and business environment. The euro area was well on recovery track also in Q2 of this year, helped by robust services activity and higher consumer spending. The UK economy also remained buoyant, owing primarily to stronger government expenditure as well as household consumptions. Leading economic indicators pointed towards sustained expansion in economic activity during Q3 of this year also, with the JP Morgan Global Composite Output Index rising to 52.8 in August this year. This was mainly supported by positive performance in the services sector on account of rising new order intakes and improved new export business as well. Global inflation remains on a downward trend, gradually converging towards major central banks' respective targets. This reflected largely favorable global commodity price developments and the effect of past monetary policy tightening. Since the last MPC meeting, global food prices have declined, while the Freightos Baltic Global Index, a measure of freight cost, has showed some signs of stabilization. Oil prices exhibited some volatility, moving in line with the decision of the OPEC Plus production cost cuts and economic concerns. The IMF, in its July WEO update, forecast global inflation to fall from 6.7% in 2023 to 5.9% this year, and further to 4.4% next year, that is in 2025. In view of these favorable outturns, interest rate cuts by major central banks are well underway. Since the last meeting of the MPC, that is since the July meeting, 47 decisions of monetary policy committees globally have been to maintain the status quo. 44 decisions were about cutting rates, as opposed to 5 decisions to raise rates. The US Fed and the European Central Bank, as you have learned, have lowered their respective policy rates by 50 basis points and 25 basis points at their September 2024 meetings. The US Fed will be convening 2 more meetings till the end of this year, and the market expects 2 further policy rate declines of 25 basis points each. The tendency globally has been to move towards a policy rate decline, as evidenced by around 120 decisions from central banks around the world to lower their respective policy rates since the start of 2024. On the domestic front, first quarter GDP growth stood at 6.4%, led by robust performances in main economic sectors, including accommodation and food services activities, construction, financial and insurance activities, transportation, and wholesale and retail trade. Domestic consumption and investment continued to rise at a solid pace also, supported by a large extent by ongoing capital projects and buoyant household spending. The tourism sector continues to be a key engine for growth, largely reflecting upbeat demand for travel and tourism and effective promotional campaigns. Tourist arrivals aggregated 865,523 for the period January to August this year, constituting a recovery rate of 99.2% relative to the 2019 level. Arrivals were up to also by 7.7% compared to January to August 2023, that is for the same period. Tourist earnings were also buoyant, totaling 51.3 billion rupees over the period January to July 2024, higher by 42.5% and 6.6% compared to the corresponding periods of 2019 and 2023, respectively. The current account deficit is projected to improve also from 4.5% of GDP in 2023 to 4.3% of GDP in 2024 on account of healthy tourism earnings and higher interest rates. Gross official international reserves of the country remained comfortable at $7.9 billion as at 17th of September 2024. That is an import cover of around 12 months, thus providing adequate buffers against any potential external shocks. The banking sector remains resilient, and strong capital buffers and liquidity buffers also demonstrate strong signs for the banking sector. Inflation-wise, inflation in Mauritius has continued to decline, mostly reflecting the benign global food and energy price environment, lower shipping costs, as well as the fading out of domestic shocks. Headline inflation fell from a peak of 11.3% in February 2023 to 4% in August this year, marking 18 months of successive decline, and stayed within the inflation target of the Bank of Mauritius, that is being 2 to 5% since the last few months. Core measures of inflation also remained engaged on a firm downward trend, standing at 2.3% in August this year. A more granular analysis reveals that the proportion of pro-inflation items in our CPI basket has been gradually decreasing. In particular, the share of CPI items that were generating inflation of more than 7% shrunk from 42% in June 2024 to around 24% in August 2024. Concurrently, the share of items with appreciable inflation rates in the range of 0 to 5% worked out to 44% in August 2024, while the share of items that were deflationary, less than 0%, was relatively unchanged at 19%. These dynamics provide concrete evidence that inflation will stay within the target range of 2 to 5% and converge towards the Bank of Mauritius's midpoint target for inflation, namely at 3.5%. In terms of money market, the bank maintained its open market operations to prevent the buildup of rupee excess liquidity in our banking system. However, in Q3 of this year, the bank reduced the amount of Bank of Mauritius bills issued in the 91-day, 182-day, and 364-day, given that a significant amount of rupee excess prevailing on the domestic market was being absorbed through regular FX interventions. Bond bills for an aggregate amount of 12.85 billion rupees were issued between 11 July to 13 September this year, in addition to the weekly issuances of 1 billion rupees in the 7-day tenor, while a rupee equivalent of 12.5 billion rupees was mopped through the sale of foreign currency on the market as well. Surplus funds at the end of the day were placed with the bank under the overnight liquidity, and that decreased also. Consequently, the outstanding amount of BOM securities issued to manage excess liquidity decreased from 144.8 billion rupees as at the 11th of July this year to 135.8 billion rupees as at the 13th of September this year, of which 54% maturing within 1 year. The weighted average overnight interbank rate hovered closer to the lower bound of the interest rate corridor, ranging between 3.10% and 3.15% since our last MPC. The domestic market remained driven by the high volume of transactions by the financial sector in terms of FX, importers of goods as well as tourism operators primarily, from US dollars, and net sales of 202 million US dollars were registered. In order to cater to the FX requirements of importers building their stocks ahead of the end of year period, the Bank of Mauritius intervened on a regular basis since the 8th of July this year. A total amount of 270 million US dollars was sold to banks between July and 18th of September this year. The rupee continues to reflect of demand and supply, as well as international currency movements. Between 11th of July this year and 18th of September, the rupee has appreciated by 2.2% against the US dollar. I will now share with you some developments on the soundness of our banking system and the financial system. Risks to financial stability have continued to subside, driven mainly by improving macro-financial conditions. Debt sustainability and serviceability metrics have stabilized as household income and corporate earnings grew steadily. The asset quality of banks stayed sound, with no signs of debt servicing distress as well. Credit flow by the banking sector to the economy has remained on the steady upward trend since the beginning of the year. Bank credit to the private sector grew annually by 7.6% in July 2024. Household credit, a major contributor, I must say, to the demand for bank credit, expanded at an annual rate of 11% in July 2024. Similarly, bank credit to non-financial corporations in Mauritius registered a yearly growth of 5.1% in July this year. The banking sector maintained its resilience, supported by robust capital and liquidity buffers. The capital adequacy ratio was 20.9% as at the end of June 2024, and the liquidity coverage ratio, the LCR, improved to 328.5% in July 2024. The stress test results based on June 2024 data showed improved resilience of our banking sector, as the number of banks showing vulnerabilities have been declining. The banking sector held robust solvency and liquidity buffers to withstand the series of shocks applied under the various scenarios, including in the forward-looking scenarios. The Bank of Mauritius continues to monitor risk to the stability of the financial system while ensuring price stability. I now come to the deliberations and the decisions and the decision of the meeting of the MPC held today. Recent price dynamics confirm that the Mauritian economy is firmly engaged on the disinflationary path, helped by some favorable driving forces, notably limited pressures on international commodity prices, normalization of freight costs, and weaker than expected pass-through to domestic prices, as well as fading domestic demand and supply imbalances. In the absence of any shock, headline inflation is projected to be around 4% by the end of this year, settling within the target inflation range of the Bank of Mauritius. As I mentioned before, inflation has been declining over the past 18 months and has, over the past 4 months, remained within the target range also. Going forward, this trend is expected to continue. With regards to the growth outlook, it is expected that the domestic economy will sustain its robust momentum. The tourism sector is expected to maintain its strength, benefiting from increased demand for travel and tourism, enhanced connectivity, diversification of the tourism base, with a target of 1.4 million tourists maintained for this year. Activity in the construction sector will be underpinned by major public infrastructural projects such as building of social housing units and enhancement of road networks as well. The financial sector will also be supportive of the growth, leveraging on the remarkable reputation of Mauritius as an international financial center. The Bank of Mauritius maintains its projections for real GDP growth at 6.5% for this year. The MPC deliberated that while growth remains consistent, the ongoing disinflationary process is well entrenched in 2024 and looks set to achieve the medium target of 3.5% soon, with some upside risk to the inflation outlook subsiding. The MPC was thus of the view that this environment creates space for a lower policy rate, without compromising certainly on other macroeconomic objectives. The MPC has therefore today decided unanimously to lower the key rate by 50 basis points from 4.5% to 4%. The MPC will certainly continue to monitor the economic situation closely and stands ready to meet in between its regular meetings if the need so arises. The next meeting of the MPC will be announced in due course. On this note, I conclude my intervention and would be pleased to address a few questions, if any. Thank you.
Pour quel impact cette baisse de 0,50 points sur la roupie pour les mois à venir?
Look, if you look at our key rate, which was standing at 4.5%, and now at 4%, there's a drop of 50 basis points. There is certainly an interest rate differential that existed between the US dollar and the rupee that was there, and market had already been accustomed to that. Now, when we're lowering by 50 basis points, it is matching the lowering by the Fed also. So effectively, there is no increased interest rate differential between the rupee and the US dollars. Therefore, market would continue to operate the way it is operating because there is no increased differential between the rupee and the US dollars. But I must also say, as I said it just now, over the last 2 months, basically, we have been seeing an appreciation of the rupee against the US dollar. When you look at it, nearly 2.2% of appreciation has been there between the US dollar and the rupee also. Certainly, markets would determine, and we closely watch how markets are performing also.
Looking at the
one at a time. Yeah.
Looking at the rate of inflation and the range you fix yourself, for you it seems that it is mission accompli.
Look, you need to understand one thing. We have explicitly adopted an inflation target since January last year. Before that, we didn't have any explicit target. So the target of 2 to 5% with a midpoint of 3.5% is a result of the new monetary policy framework that the bank has adopted. And certainly, when you look at where we were at 2 years ago in terms of inflation and where we are in terms of headline, yeah, definitely. We are well entrenched within, our target range. Certainly, the medium-term objective is to reach the midpoint. Again, we see the downward trend continuing. And this is also what explains the rationale behind the MPC's deliberations of today and decision to cut by 50 basis points. Because if we were outside our range, certainly, we would not have taken that decision. Yes.
The Fed has announced new cuts, no?
Yeah.
I think next meeting will be 100 basis point and then 50 up to 2% in 2026, I think the interest rate. So that means that maybe this scenario will be followed by the Bank of Mauritius that in some given, I don't know, maybe by next year, 2%.
No, it is not automatic. It is not automatic. Look, the decision of the Bank of Mauritius's MPC today is a decision that has been taken after a lot of deliberations in terms of, and follows an assessment of the economic dynamics of our country. Okay? Each country is different, certainly. Does not necessarily mean that as the Fed will continue, if they continue, I mean, market is forecasting quite a lot of cuts, but if they continue to cut, does not mean that the MPC will follow. We will continue to take our decision in light of our various factors that we look at, we'll assess, and then we will take the decision accordingly. Today, we were comfortable to move with a 50 basis point of cut. Does not mean that, when others are cutting, we will follow. So decision of today is based on in-depth assessment of our dynamics that I just detailed to you.
And you motivated partly by...
Certainly, it's a factor that you cannot ignore in the decision of, especially you would say in emerging markets and the developing world, the Fed decision has an impact, especially on currencies. So basically, this is a factor that you cannot ignore per se. But does not mean that this is the only factor that you will look at. It's part of a broader basket of factors that we'd normally be looking at. Yeah.
Parlons de l'intervention de la Banque de Maurice. On a déjà abordé ce sujet la dernière fois dans un autre entretien. De juillet à ce mois-ci, plus de 270 millions de dollars ont été injectés sur le marché. Comment la Banque de Maurice a pu faire pour collecter ces millions-là? Est-ce qu'il y a eu des ventes des bonnes ou des ventes de l'or pour pouvoir intervenir à ce niveau? Autant de dollars sur le marché.
No. Look, I mean, we manage our reserves, as you know. And if you look at it collectively and cumulatively, since the pandemic, we have already intervened on the market to the tune of $4.4 billion US. So certainly we didn't buy that from the market. I mean, the Bank of Mauritius has its own operations. We've got a dedicated team on financial markets. We operate, we manage our reserves, and we decide what we need to do. Our decisions to purchase from the market every now and then, when we feel it is correct to purchase from the market, we do it. But certainly it is not, what we look at to make our interventions. We manage the reserves of the country, which stands at nearly 8 billion as of now, as I told you.
Le fait que la Banque de Maurice intervient sur le marché conséquemment, par exemple, 2 fois par semaine, comme ça, cela démontre qu'il y a un manque au niveau de l'entrée de devises à Maurice à travers même le secteur de l'exportation. Est-ce que cela a été recensé d'après les chiffres de la banque ces derniers mois?
Look, no, there is steady increase in the inflow of FX in the country. There is steady increase in the inflow of FX in the country, although we still have a small gap if you're comparing, let's say, pre-pandemic to where we are right now. Okay. Our intervention has been only once per week. I mean, we didn't do twice per week so far, and this year we didn't do twice per week. It's been once per week since the beginning of July. We decided to do so because on a daily basis, we monitor the entire banking system of the country. We assess the market needs also. And as I said it, we are at that point in time when there is a lot more of orders being placed because of end-of-year festivities coming. And if it was not because of the end of year festivities, market would have been sufficient to operate by themselves. But because of this end of year festivities, there is a gap, additional gap that is there. So this is where you would see that the Bank of Mauritius has been intervening with different amounts. For example, we intervened, once I recall, with 50 million. Then we had 25, we had 20 million, we had even 5 million. So basically, we assess the market. Depending on the condition on the market, we take the decision and the call. Yeah. Yes?
So you've sold about $270 million within the month. So when does the central bank plans to restart buying dollars from the market and to kind of consolidate its
sure. No, look, the path to purchasing is always on. Huh? I mean, if we get an opportunity, we purchase, but certainly we will not purchase to disturb the market. For us, the priority is for the FX market domestically to operate in a very healthy manner. We will only decide to purchase from the market when we see that there are comfortably excess amounts of FX on the market. So this is what will prompt our decision. And our decision is, as I said, on a daily basis. This is there's a whole department at the level of the Bank of Mauritius in constant touch with all other banks to monitor the situation, and further to the situation that we see in front of us, we decide. Certainly, we remain open to further consolidating our reserves.
But despite this fact, we have feedback from importers, from traders, that they are facing the same problem. Not even those. Last time someone told me that the problem to have the Japanese currency. So not only dollars, but most of the currency.
Sure.
There, I want you to have explanation on this.
Of course. No, look, it is true that you would see when we intervene in the US dollar. All other currencies are internationally traded, so then you would see commercial banks going and purchasing other international currencies. So many parts of the world, especially emerging part of the world and the developing part of the world, market situation is still very tight. It's not only in Mauritius. I mean, if you look at most of the emerging parts of the world as well as the developing parts of the world, you would see that the situation remains not yet normal. It's still very tight. For us, again, we continue to monitor. We continue to sell when we feel that there is a need to sell. But at the same time, we are also aware of what the press has been reporting lately about, some scarcity where people are not getting. So that prompted us to certainly consult all banks and to see if there is any mishappening in terms of the good operation of the market. And I can inform you that the Bank of Mauritius, as was the case last year, we did not hesitate to take sanctions and take strict and very strong actions on banks when we felt that they were not respecting the rules of the game when it came to FX market. Now, we are certainly, as the watchdog, we would take any decision that needs to be taken if we feel that there is a need to take any sanction, even if that includes fining banks. We will be fining them to make sure that they operate as per the rules of the game. And I can tell you right now, we are considering a few cases which we may take a decision on also. But to bottom line, we are ensuring that there's a very close collaboration between the team here and all teams, treasury teams of various banks, to ensure that the market does not suffer. We will continue to do so for as long as it is required, and we'll make sure that people do get what they need. Maybe with a small delay, but they would get what they need, basically, and that is the aim of the Bank of Mauritius. And maybe just to finish off on this, We had published a communiqué also, I think a few weeks ago, where we did say that, we have set up a special desk to even handle complaints of operators who were finding it difficult to get any access to FX. There is an email that was communicated. It is there on the website also. And there is a team that is working on that. We've had a couple of cases which came our way. And I must tell you that, they were resolved. They were resolved also. Yes?
I know that you mentioned the appreciation of the rupee now.
Yeah.
Not vis-à-vis euro.
Mm-hmm.
It seems that they have been depreciating.
Yeah. Look, I mean, again, the Bank of Mauritius, we intervene in the US dollar. So basically our intervention, when we look at primarily, is the US dollar. Then other currencies also, they're open to market conditions and market forces. So they reflect market forces. But when the bank intervenes, we intervene in terms of the US dollar. Yeah.
Last question, Governor. Nous avons appris dans les gouvernements qu'il est possible qu'il y aurait une mesure par rapport au paiement de l'intérêt complet pour les jeunes de 18 à 35 ans pour l'achat d'une nouvelle maison, etc. Est-ce que cela peut causer des éventuelles distorsions dans le secteur bancaire par rapport à est-ce que une telle mesure entrée en action peut causer des distorsions dans le secteur?
Look, certainly we don't have details of how it will be operating, but certainly I'm sure that this measure, if implemented, will be done in very close collaboration with commercial banks. So I don't know the integrities of how it will be operating, but I'm sure that it will be done in very close collaboration with commercial banks. So as of now, there's no further detail, so I cannot really pronounce myself on that, but I think, look, it will be a good boost to the housing, especially the housing segment. But I'm sure, there would be discussions between the parties who are concerned with the commercial banks. Good? Okay, I thank you for your attention. Thank you.